Good investing often comes down to a manager's smarts and unique perspective. Mark Finn, portfolio manager for Rowe Price Value Fund, took a roundabout route to his career, starting out as an accountant and moving into investing by first helping with bankruptcy issues. His diverse experiences have given him insights into controversial companies that other investors avoided, but which have handsomely rewarded his fund shareholders. It's that willingness to take intelligent risks that make Mark Finn a money master.
There's probably three primary things that have led to my success as an investor. First, I have a phenomenal place that I work. Rowe Price has a wonderful centralized research platform, and I'm able to leverage that. I work with those analysts. They're experts. They're phenomenal people to soundboard with, and they really help in my process. The second thing is I'm naturally a curious person that likes to interact with other folks, people that are also curious and interested in learning. And then finally, my experience has really helped. I came up as an accountant. I first ended up working in the bankruptcy and distressed investing area, followed by high-grade bonds, working in the utility sector. And that migrated during the Enron crisis down to high yield. And then finally, I spent 5 years doing equity analysis. So I worked across all aspects of the capital structure with an accounting background. The large value process and the way it works is I'm looking for relatively high quality companies that are experiencing some controversy. Then I want to leverage the centralized research platform and my own experience and determine whether that controversy is addressable. There's really three, I think, fertile areas where controversy unearths some potential value. Areas where a company has self-inflicted injuries, self-inflicted damage, where there's a cycle that's troughing, or where there's an industry that historically has been poorly structured, where over time you could see that eventually there may be some improvement in the structure. So what we're doing is identifying companies that have that controversy and are cheap because of that controversy. Cheap to their historical price, the sector, and to the market. We do a bunch of fundamental analysis on those companies, and then some opportunities fall out of that. Over time, it's changed a little bit, and the way I would describe that is prior to the financial crisis, there was a little bit more one-off individual company opportunities where there was self-inflicted wounds. More recently, what I've found is in the wake of the financial crisis, there's been some industry restructuring that has occurred, and we've found that to be very fertile. For example, airlines, refiners, the NAND, DRAM memory markets, where they've gone from several competitors down to few, and as they've consolidated, the pricing power has really emerged and the cash flow has really expanded.